Hello everybody, my name is Mark. Welcome to another one of my investing videos. And in this video is kind of a response to one of the comments of somebody who was watching one of my other videos, and this person asked me a question if I bought any more shares or if I changed my position at all. And so I'm going to try to answer that question. Well, first of all, I'm going to answer that question right now and say, no, I didn't. I still own 200 shares of STIHL, dollar cost average $14.80. I own 6 put options at $10 strike price. I spent about $200 per contract. And I have a call spread where I bought to open $15 calls, and I've been selling to open monthly calls. And I believe I've collected about $150 on that spread. And I have not added or made any changes to that position. About a week ago, I was thinking of buying another couple hundred shares, and I want to explain why I decided not to. So I'm going to very briefly talk about my own personal rules that I personally follow. And let me just say right off the bat here that I don't believe that my rules are better or worse than anybody else's rules. I think that I don't think there is such thing as right or wrong or good or bad when it comes to this. To me, the only thing that matters, the only question that you should ask, are you making money or are you losing money? And to me, that's really the only question that matters. All the other stuff like, should I buy or sell? Should I use a moving average? Yes, no, or maybe. All of them could be right. It just comes down to your personal trading strategy. And so I'm going to talk about my rules and what helps me make my own personal decision about whether I buy or sell or hold a stock or sit on the sidelines. So here we go. Rule number 1, I only buy stocks that go up, and I want to sell the stocks that are going down. And I will hold stocks that are trading within a range. Okay, now let's take a look at STIHL. And last Wednesday, that would have been the 7th. Okay, and let me pull up my chart here. Okay, this would have been Wednesday, and right here is the day before. So this is a monthly chart on STIHL, and the 6th is right about here. I'll draw a little line. Yeah, I guess I don't do very straight lines, do I? And let me draw a line where the 6th ends. Okay, so that's the end of that. And now let me draw a line for the 7th. Yeah, not a straight line, sorry. And so this part right here is the 6th. This part right here is the 7th. And now let me put in the 8th. And there's the 8th. So I'm not an artist. I don't draw very straight lines, but that's the best I can do. Okay. Now, it was on last Wednesday, a week ago, on the 7th, that I was considering possibly adding. And I decided not to, okay? And now that you see the part where it was Tuesday, Wednesday, Thursday, I'm going to delete those and just try to visualize that section in the chart. Okay, now, if we go before the 6th, okay, from the 5th, you can see that STIHL really took a tumble. And notice that when STIHL was falling, there were no significant retracements. It was just pure downfall. No retracement, downfall. And right here, it made its first bump, but then it went down. And it was right here, and this little part right here, where STIHL finally made its first retracement after, when was this? That would have been on the 31st of July. So from the 31st of July all the way to the 6th, for a week straight, STIHL just basically went straight down. And so, of course, I wasn't going to buy then. And you don't have to be any good at technical analysis or charts to know that this is not the time to buy, at least if you go by my rules, okay? and so I didn't buy there. But right here was the first retracement. Okay, and so at the end of the day, I was thinking, is it time to add to my long position? Should I buy more shares? Should I sell some puts? And I did sell to open some $12 puts in my Schwab account. My Ameritrade account is my Roth IRA. And the reason why I did it in my Schwab account is because you never, and I think I did it like right around there somewhere, and I sold to open $12 puts in my Schwab accounts. I did 2 of them, and I got about $50 a contract for that. And the reason I did that is because I wanted to kind of take a small risk that maybe steel was done going down, which obviously it's not, but I wanted to take the risk that maybe steel was done going down, but I didn't want to add the risk in my Roth IRA because I was, it's 50-50, and so I was only 50% sure that steel was done going down, and so I took a 50-50 chance that maybe steel would actually come back up, and I was going to try to make $100 between now, or I should say between the 6th and to September. Those puts that I sold to open expire September the 19th, and I think it had an expiration of 39 days. Okay, but even after that, I was still considering buying more shares in my Roth, right? Because this to me is significant. It's the first retracement that we've seen in over a week. And so I thought, okay, is it time to go in long? Is it time to add? Okay, now let me zoom it in here. So let me zoom in right where the retracement started. And let me zoom up to the end of the 8th of August. So it would be about right there. Okay, so this chart is from the retracement, and the 7th of August would be right. Let me draw a little straight line. So that would be the 7th, the dividing line between the 7th and the 6th. And then where's the 8th? Right here. So that would be the 8th. I'm actually drawing a little bit straighter line. And over here somewhere is the 9th. Over here somewhere is the 9th. Okay, so this right here is Tuesday, the 6th of August. Today is August the 16th. And the market opens in a couple hours. It's 4:30 in the morning West Coast time. I'm on the West Coast. And this would have been Tuesday the 6th, about a week ago actually. And this is Wednesday the 7th. And this is the day that I thought maybe I'll buy a couple hundred shares. Okay. And so I first began thinking this when the market closed on Wednesday. Now, my rules is number one, I only want to buy stocks that are going up, and I don't want to buy any stock that's going down, right? So this right here is the key. That is the support, and that support is at about $12.15. So when the market opened, it opened down, steel opened down, and then we go all the way over here, and bingo, steel went lower. Okay, and even though that's very small, even though the low of those candles are at, okay, right here is $12.15, and right here is $12.10. That's only 5 cents, but it still broke below the support. And so when it did that, I said, okay, maybe steel is not done going down. And then the very next day it went up. I'm not a day trader, by the way. If I was a day trader, then maybe I would be kicking myself saying, oh, golly gee darn, why didn't I buy here and then sell here? But I don't know how the heck people can have that kind of an ability to be able to do stuff like that. I just don't see it happening in myself. I'm more of a big picture with little little retracements and patterns in the middle, right? So steel broke support, bingo, and I said, nope, I'm not doing it. Okay, so if we zoom back out here, and let me clear that out. So this would have been the 8th, and it went up, and then the very next day it went back down, and it went even lower. Okay, so this would be the first part is going down here, and the second part and this right here, and now we can draw just a regular trend line. So here steel's dropping. This part here, steel's just trending. It's still trending down. It's not like rocket ship dropping like it was before, but it's still trending down, right? So maybe it's slowing down, maybe the curve, and maybe eventually it'll bottom out and then finally find its grounding. I don't believe steel's going to go to zero, but it's not done going down. I have to see some kind of evidence or facts for me to believe that it's done going down. So here it went straight down. That's the first retracement. This part right there is the part where it broke the support and it went down to $12.10. The previous support over here was $12.15. It broke the support, and so I said, nope, I'm not going to add to the position. And then it went up, and then I thought, it went higher than the last, so maybe is it done? So I had to see if it was going to go below that support, right? And so this support here, $12.10, and then it went lower. It went down to $11.97. So I said, okay, volatility is increasing. It could go up. It could go down. So it's kind of like at a crossroads here. And then the crossroads was, what's it going to do? You know, when you see volatility increasing and you see stocks and charts, the supports being broken, but also resistance got broke too, right? That means that the stock needs to make up its mind. Is it going to actually turn around and go up? Volatility is increasing. It's bouncing up and down. It broke resistance, but it also broke support. Steel needs to make up its mind, and it did. It went down, and this time now it's just trending down, just like a normal downtrend. So it's not as bad as this, but it's still trending down. So all of that is the reason why at this time I am still not going to add more shares or calls or sell any more puts or any of that stuff until steel stops trending down and it has some kind of solid grounding and it starts to at least level out and it stops breaking down below the support. So in order for me to know if the stock's done going down is that it has to stop breaking the support. Okay, so if I go to the 5-day chart now, then its latest support is all the freaking way down here. It's down to $10.87, which by the way is 52-week lows. Okay, so now that's the support, right? So the question is it going to keep breaking support? If it goes lower, then what do you think I'm not going to do? If it goes down to $10.60, guess what I'm not going to do? I am not going to buy more shares of this stock. And so, and this kind of goes hand in hand. I never try to predict the bottom. I am not an astrologist. I do not, 1-900 psychic. I don't have any crystal balls, and so I'm not even going to try to predict. I just go by the evidence. When support is being broken, it means the stock's going down. And as long as support keeps getting broke, right? Support got broke over here, and then it went here, and now it just got broke again yesterday. Again, market opens here in a couple hours. We're going to see what what steel wants to do. And so again, no, I did not add any positions to my money. I still own 200 shares of steel, 6 put options, $10 strike prices, and my call spread, 2 $15 calls, and I actually tried to buy to close the 15s that I sold to open. I got like $50 a contract, and they're down to 5. And if I have short calls or puts that go below $5 or lower, then I try to close out because it's free commission, and then I'll open a new one. And I'm going to take a look at the option chain and see what's out there, what's available, so I can continue to make money off those long calls. My spread is not doing that bad. My dollar cost average on my 200 shares is $14.80. Steel's down to $10.91. That's not so great. But the good thing is that there's shares, and so I can just hang on to them. And finally, my $10 put options, I have 6 of them. I spent $200 a contract, and last time I checked yesterday, the bid was about $214. The ask was like $227. So let's say I can get out for a $215 or $220. I'm up about $100 on those, right? But I still got to do some catching up to do. And I was looking at the delta on those $10 puts, and I had 6 of them, and it equalized at about $1.80. So eventually I'm going to have a higher delta than my stock, and that will be pretty cool. Now visualize this. If steel actually went down to 0, my 10 put options will be worth, what is it, $10,000 a piece? Is that right? Because every dollar that it goes down, no, I guess it'd be worth $1,000 a piece, not $10,000. That'd be pretty cool if it were. I guess it'd be worth $1,000 a piece, and so I'd have 10 put up, or I'm sorry, I have 6 $10 put options, and I'd make $6,000 on a $1,200 investment, and that would very well cut my losses on steel if it did go to 0. But it's not going to go to 0. If I actually thought it was going to go to 0, I mean, steel is not a penny stock. It's still a very strong. Let's look at the market cap. If this actually shows the market cap on this, where is it at? Where's the market cap? Well, okay, I can't find it, but I'll just tell you it's better than this is not a small cap stock. Actually, you cannot see this in the video, but I'm going to look in my phone and I will just tell you, and you take my word for it, the market cap is $1.86 billion. This is a $1.86 billion stock right now. It's the market cap right now as we speak. Okay, I cannot find that figure right here in this tradingview.com, but that's what we're looking at, the market cap here. So again, the answer is no. I did not add any position, any shares or anything to my current position because steel is not going down. It keeps breaking below the support. Okay, so that's my big rule, is I don't want to buy stocks that are going down. How do I know if the stock's going down? The answer is if I keep seeing this nonsense. Okay, support and then support and then support keeps getting broke. You know, as long as I keep seeing that kind of stuff, nope, I'm not going to be buying any steel. This is a 5-day chart. Let me go back to the month chart. Okay, so if I keep seeing this and then broke support and then break support and break support, as long as it keeps going lower than the support, no, I'm not going to be buying any more shares. I'll just hang on to my 6 puts, and I'm going to wait until steel starts actually breaking the resistance. It only broke it once, you know, and then not again, didn't break resistance anymore. I don't see any resistance getting broke, do you? So that's one of the things that you have to look for, is if steel starts breaking resistance, like if we go to, let's say, 5-year chart, okay? Wow, what a crazy looking chart. But look, right, resistance gets broke, resistance gets broke, resistance gets broke, resistance gets broke. And, you know, this is lots of volatility here, which is good. I like volatile stocks, right? And it retraces, and then it goes up again, and then it retraces and it goes up again. That's a clear uptrend, right? That's the time that you want to go long, and you wait for these retracements to buy it. And so when it goes down, as long as it doesn't break the support, you're good, right? And then, now that's not to say that it's guaranteed it's going to go up. It could have kept going down, and then I'd be scratching my head, why did I do that, right? But that's what the stop losses are for. That's what the hedging's for. That's what the puts are for. So anyways, that's a quick summary on why and when and what is going to make me start buying more shares of steel. Steel has to drop. Steel has to stop dropping. It has to stop going lower than the support. It has to stop doing this and then go down, and then now we got support, and then goes down. Now we got support and support. It's got to stop doing that. And until it stops doing that, no, I'm not going to be buying any more shares or selling puts or anything. I have to wait until it actually does a turnaround and it does something like this. Like it goes down and then it makes a support and then it goes up and then it goes down, but then it makes a higher support and then it maybe goes up again. And even if it doesn't break resistance, as long as it stops breaking the support, and when it goes down, it keeps going up like this. As long as I see stuff like that and I can actually draw lines and it looks like a step ladder that's going in the upward direction, that's the time that I will start adding to my position. But I haven't been seeing that yet, so I'm just going to hang on to my 200 shares, my collar. I'm not worried about the 2 put options that I sold to open in my Schwab. those 2 put options were a hedge on my 6 put options. So I'm not worried about losing money in that, because if I do lose a lot of money in those, I'm going to make a crack load of money in my Roth, because I have 6 long put options that are going to go up a lot. If steel goes down to 10 or 9 or 8 or $7, however low it wants to go, that is fine and dandy by me. So anyways, that's it for this video. If you have any questions about anything that I do in my own personal investing or trading, I am an open book. I don't sell anything. I don't write books. I might write a book someday, but I don't sell websites or services. I don't do all the other things that all of these wonder traders do, that promise you everything, and they say, but just give me $100 a month. I'm not like that. I just do videos. I'm a vlogger mostly. I enjoy sharing my videos, my ideas, and even my real life option trading with the world of YouTube, and I'm very happy to do it. So anyways, if you like the video, hit the like button, whatever you want to do. Any support is appreciated, and any questions, I tend to answer most and all of my comments, and I will respond. So thank you for watching, and I will see you in the next video. Ciao.